let me address something that Mr. Puri spoke of. And since we're talking about competitiveness of India's financial sector, how important is privatization and or consolidation going to be in order for us to be more competitive?
Well, I mean, yeah, it is important, and I think we are continuing to maintain the privatization momentum, and there will always be ebbs and flows for various reasons, and some of the processes involved are also quite time-consuming, and there are litigation challenges at every step by different stakeholders. But I think if we have to unlock the efficiency of assets, both monetization and privatization are critical.
Is it more pragmatic then to take that approach and say, look, let's unshackle the public sector, the PSBs, let's allow them to function in the way that, whether it's hiring and so on and so forth, the way that the private sector does? I mean, there have been many committee reports that have given recommendations to exactly that effect, and let's not overstate this need for consolidation and privatization.
Yeah, I mean, I think the reason we're talking about this less today, in a way, is simply because the rest of the banking system has grown to a point where the relative impact of the underperformance of the public sector banks is less of a drag on the financial system as a whole. So we've got a good outcome, which is just a function of that phenomena. And by the way, I'm glad we're there. I continue to be highly skeptical about so-called reform mechanisms within the public sector construct. I have been for 25 years. I have never believed it is possible in our system to reform a public sector enterprise. Privatization is the answer. There are political constraints on privatization, in which case the next smartest thing to do, which is what I think we're doing, is to reduce the relevance of the public sector. That may seem a little, I mean, I guess not very optimistic to some, but actually it is a very intelligent approach. It is the only approach that has actually been proven to work in India. And not just in India, by the way. Outside of Singapore and a couple of places where you happen to have philosopher kings running the government, there's pretty much nowhere where this has worked. So the good news is that the public sector banks today are able to do less harm to the financial system, even should they, for some reason, continue to be poorly managed. And I fear they will continue to be relatively poorly managed, despite, and this is not a reflection on the quality of management, this is entirely a reflection of the contradiction of forces and governance under which they have to labor, and we have not achieved any improvement in that in the last 25 years.
Gross FDI inflows into India are down by 16% in FY23. That's the first fall that we've seen in the past decade. Of course, the FY22 base was also significantly higher. But what's your view on this, especially in the context of the fact that we are likely to be beneficiaries of this global supply chain de-risking that's taking place and so on and so forth? And what more do you believe we need to do? I mean, most sectors have been opened up completely, automatic approval and so on and so forth. But what more do you believe we need to do to ensure that we continue to draw in the kind of FDI that we aspire?
Yeah, I mean, your numbers are right. For example, I think if I'm not mistaken, in the first 11 months of in the last financial year, we got about gross $66 billion compared to 84, which in the context of the rising interest rates and geopolitical uncertainties is not a bad performance, it's a pretty good performance. I mean, yes, you are right. We have opened up many sectors, but also, I mean, whether it is with respect to issues on the investor-state interaction and protection regimes, or in the stability of tax policies, or for that matter with respect to our last-mile connectivity and plug-and-play issues in the infrastructure on the ground. These are all the areas where we can still continue to make improvements that would bring these monies into India. I mean, but it's very promising that, for example, last month, I think, Wall Street Journal had a very big story on calling India the new factory floor of the world. And I think that's, and it is not just on the basis of one or two companies relocating to India or adding India to their investment bucket list, but definitely it is more than one or few companies. It is the beginning of a trend. And I think as companies come to terms with uncertainties in their own backyard, I think their ability to focus and concentrate on this supply chain diversification, including India in their list of countries, will only get better.
I know you've defended the imposition of the 20% TCS as part of the LRS chain, saying that it's not retrograde, it's not perverse. But for an end customer, sir, and I understand bringing credit cards into parity with debit cards and so on and so forth, which is what the regulator with the RBI also said. But at 20% TCS imposition, it impacts the common citizen. It impacts, every transaction that I make, for instance, and I'm an honest taxpayer. I can claim at the end of the year, but at that point in time, it is a 20% hit.
First of all, they have exempted transactions up to 7 lakhs of rupees from this TCS. So bulk of the transactions made by most of us will not be covered under this levy. And there is also attempts to link the TCS with your tax deduction at source, such that if there are TCS payments being made by you, then it has to reflect in a lower tax deduction at source, such that it simply is a matter of making sure that you are not affected from a cash flow perspective. That is the second thing that is happening, and that will also provide a huge amount of relief for people who are concerned about this annoyance or irritation of seeing a TCS apart from your TDS, etc. And the third thing is you have to understand that there are data that are available with the government that do point out that this mechanism has been not just abused by a small set of people or who are evading taxes, but it is the volumes involved are fairly substantial. One point of view that is being made is that all that you needed to do was make it 1% or 5% so that you can track it, but there are people who are happy to stay out of the tax net if it is 1% or 5%. That is still a price that is worth paying for them. So there has to be a deterrent effect as well, at the same time without inconveniencing, as you pointed out, those who are going about paying their taxes. And that is why I think the exemption was done, and B, the pass-through of TCS into the TDS deductions will also make sure that the ordinary taxpayers do not see any impact as far as they are concerned.
Well, I won't get further into this conversation because it'll require a lot more time. But Puri, I think we're pretty much at the end of our session and at the end of our time. So I want to get wrap-up comments from each one of you. And I think we've touched on a whole host of issues on the opportunities, but more importantly on what the road ahead should focus on in terms of priorities. At this point in time, what is the next big disruption that you see for the financial sector? We've seen what UPI has done in terms of digital payments. We have now seen what the account aggregators potentially likely to open up by way of an opportunity, not for the incumbents, but for the company outside of the incumbents. What's the next big disruption that you believe we need to be prepared for, or that you foresee for the financial space?
The one that I would hope for is the one I referred to earlier, which is where instead of banks holding only the best assets, where the bulk of their balance sheets are essentially buy and hold of AAA rated companies, we actually have risk transfer, mechanisms for risk transfer developing, whereby, as Mr. Ramann said, you've actually got people who actually need access to bank capital, not getting crowded out. And eventually, by the way, even they can be securitized, pooled, and transferred, which is a hallmark of a developed system. So it's financial deepening. The big disruption, positive disruption that needs to occur in India still is financial deepening. And I think we can get there through the development of capital markets. And part of that is technology enabled, of course. Part of that is our confidence to integrate somewhat, whether GIFT City indirectly or more directly, with global markets. Gain the confidence to do that. And I can't resist saying on that last point on TCS, sometimes one of the occupational hazards of being a public servant is you have to defend policies that you may not want to.
Well, Mr. Ramann?
So I'll clearly say that on the heels of what's happening in the country as we speak is the formalization of the informal entities. We're talking 7 crore informal entities across the country. And the definition by my dictionary is GST versus non-GST. So, you have the GST guys and you have 7 crore non-GST guys. Now, how do we bring them in? They're all paying interest rates of 30% and above. So do we look at what, actually it's not my original idea, but it's what the Standing Committee of Finance said, that let's look at a Vyapar credit card. We now have got credit on UPI. We can actually look at a credit card on UPI and make that working capital come into the hands of all these small 7 crore entities. Some of them are just needing a working capital of 2,000 rupees, which they then turn around every 5 days. So, you know, there is a huge disruption waiting to happen. It's really about making the credit come to them at reasonable rates. I'm not saying they'll get 10%, but even 15% is good for them. So, you know, get them to become productive. They will become, you know, sort of suppliers to so many more people. The value add that they can bring in is huge.
CA, I'll give you the last word.
Thank you. I think more than innovations or disruptions, the one disruption that I'm still looking for is the behavioral disruption, willingness of large private sector entities, government departments, ministries, public sector enterprises to get into the culture and the habit of paying their MSME suppliers on time. That is the disruption that I'm waiting for.
And that message has been sent out many times over from the government to the private sector, and hopefully we will start to see that change. But thank you very much, CA. Thank you, Mr. Ramann, Kaku and Mr. Puri for joining us here this afternoon and giving us your insights as well as your take on what the potential disruptions could be, but more importantly, what the road ahead looks like.